SMCI, the server factory that sometimes coughs, and once dreamed of orbit. Supermicro Computer, SMCI, has whipsawed investors for years, rocket ship sales one quarter, squeezed margins the next. Lately, the company has shown that explosive AI demand can coexist with troublesome profitability. SMCI has seen enormous top-line growth in recent years but also serious volatility. Margins have eroded materially and revenue can swing hard quarter to quarter. Example: Q1 FY 2026 revenue fell 15% year-over-year to about $5.0 billion. Gross margins have compressed to the high single digits, is almost equal to 9.5% in recent quarters, putting pressure on earnings despite big sales figures. Analysts are divided. Some praise the market share gains and backlog. SMCI cites large Blackwell GPU orders and multi-billion-dollar backlogs, while others, notably Goldman Sachs, warn that growing revenue won't matter if margins keep sliding. Those are the headlines. Why SMCI looks like a two-step dance. Supermicro's public narrative in recent years has been, we're the pick-and-shovel company powering the AI boom. That's true in one sense. SMCI designs and integrates rack-scale servers, direct liquid cooling solutions, and custom systems optimized for GPUs such as NVIDIA's Blackwell family. Those products are exactly what hyperscalers and cloud builders buy when they build AI factories. But the problem is execution and economics. On the top line, SMCI has booked massive quarterly revenues, but those numbers can bounce. Case in point, Q1 FY 2026 revenue landed at roughly $5.02 billion, down about 15% year-over-year. That's not a rounding error, it's real volatility in a business that investors treat like a utility for AI. The company attributes some of that dip to customers delaying deliveries for configuration upgrades, i.e., design changes, which moves revenue between quarters. Reuters and company slides confirm this dynamic. At the same time, gross margins have slumped into the single digits. The latest non-GAAP gross margin numbers are roughly 9.5%, down materially from earlier years. When revenue falls and margins contract, profits compress dangerously fast. For a hardware company, this is the classic, and scariest, combination: you're growing revenue but getting paid less per dollar. Imagine you run a lemonade stand that suddenly sells 10 times more cups. Great. Except you're forced to give them away at half price to compete with a chain that just opened next door. You'll sell a ton, but your cash register may not reflect the party. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. Why margins matter more than headlines. Revenue grabs headlines. Margins pay the bills. Having a $36 billion revenue target, which SMCI has discussed in some guidance scenarios and management commentary, looks fantastic on a press release. But if gross margins are single digits, investors have a right to ask, where's the profit? Goldman Sachs and other cautious analysts have been loud about this. In their view, SMCI is expanding share by fighting a low-margin hardware war, and that's not a recipe for durable shareholder returns. Look closer at the mechanics. Product mix matters. If the company sells more integrated racks with services, that can be higher margin than bare-bones commodity servers. But early adopters often negotiate steep discounts to get large volume and reduce time to deployment. Component cost and memory pricing. GPUs and high-bandwidth memory are expensive and cyclical. If memory prices spike or GPU supply is tight, margins suffer. Customer bargaining power and commoditization. When big cloud providers standardize designs or source from multiple OEMs, price competition intensifies and margins erode. So even with explosive top-line growth, single-digit gross margins mean investors will watch EPS prints with a magnifying glass. The delivery timing problem, revenue that looks like it ran away. A recurring theme for SMCI has been timing. When customers switch specs or delay acceptance, the company's revenue moves. In one recent quarter, SMCI said certain orders were delayed to the next quarter due to design changes. That can create a whipsaw pattern: weak quarter, then a big, catch-up quarter as deferred shipments come online. Investors often prize predictability, and SMCI's near-term numbers have lacked it. Reuters and company slides documented these delays and their impact. This is not just bookkeeping, it's real cash flow timing. If customers defray acceptance over multiple months, working capital requirements rise and the company may need to finance inventories or component purchases. SMCI secured a large revolving credit facility to handle scale, but financing isn't the same as margin improvement. Competition and commoditization, the price war everyone's talking about. One reason margins are under pressure is competition. SMCI is competing against Dell, HPE, Lenovo, Foxconn ODMs, and even hyperscaler-built racks. As server designs standardize around certain GPU formats, e.g., NVIDIA's Blackwell profile, the differentiator becomes time to deploy, integration skill, and service flexibility, not just the hardware itself. Goldman Sachs' warning isn't that SMCI can't sell servers, it's that the server market is becoming a commodity where price, not product differentiation, increasingly rules. If every OEM can deliver similar racks, buyers will squeeze margins. That's the worry behind the $26 target and the margins under pressure thesis. You can make artisanal pizza, or you can mass-produce frozen pies. Both can sell, but the economic model and margins are vastly different. Despite the margin wobbles, SMCI has managed to capture real share in hot segments. Management and industry trackers point to surging market share in AI-optimized rack deployments and direct liquid cooling solutions. Company slides and press reports have cited multi-billion-dollar orders tied to NVIDIA's Blackwell Ultra GPUs and an order backlog in the billions, numbers that underpin management's bullish revenue targets. Some public commentary referenced $33 billion to $36 billion guidance ranges for FY 2026. Why that matters? If SMCI wins repeatable multi-rack deals and the backlog converts as promised, the top line can look very different in 6 to 12 months. Investors who focus solely on quarterly margin prints may miss multi-quarter revenue inflections. SpaceX, orbital data centers, and the moonshot story. Now for the juicy speculative narrative. Multiple outlets reported in late 2025 that SpaceX is considering a 2026 IPO and that some proceeds might fund ambitious plans for space-based data centers, i.e., placing compute infrastructure into orbit to leverage continuous solar power, lower cooling costs, and other novel benefits. Reuters, Data Center Dynamics, Bloomberg summaries, and industry commentary all covered the idea that an IPO could finance orbital compute experiments and infrastructure. Let's be clear, this is not a current SMCI contract announcement. But it's a plausible macro scenario with big optionality. If SpaceX, or other space players, aims to deploy servers in space, who will design, ruggedize, and build those systems? Hyperscaler-grade racks require extreme thermal management, radiation hardening, or shielding strategies, power efficiency, and mechanical resiliency for launch and orbit. That's where hardware expertise matters. Why SMCI could be relevant: expertise in high-density, liquid-cooled racks. If orbital data centers need ultra-efficient cooling and power profiles, SMCI's DLC experience is relevant. Note, space cooling is different than Earth cooling, but familiarity with dense, integrated cooling architectures helps. Rack-scale integration capabilities. SMCI sells integrated solutions, which could be adapted for space with partner engineering. Speed and customization. SMCI has built custom racks quickly for hyperscalers, a capability useful for early orbital demonstrators. So, if SpaceX raises billions and begins to prototype orbital compute, companies that build dense, efficient racks could be part of the supply chain, either directly or through partners. That creates a speculative, adjacency, narrative where SMCI might win a slice of exotic future demand to $970. Note this as well. It is written in Revelation 14 verse 7 that, "Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters." I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: "I stayed until the end." Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.